Right, let's go for this live session. So CPI PEP part two. Now again, what I want to do, I want to take a look at the DXY first, because that's going to be the best starting point to go for first. And then after we can go from there. Give me a second. Now, sorry guys, I was late on. I got caught up in a bit of some mess, so I'm just trying to cover this stuff that I had. All right, here we go. So I got the DXY over here already. Now, the DXY, as I said, the structure that we have here, there's two sides to the story. And for the CPI prep tomorrow, it's almost like the price isn't giving away too much. Like it's trying to be mysterious, if you want to put it that way. Now, I'm still considering what I'm going to do because there's two sides to the story with looking at the price. I explain what I mean. Because of this Friday candle from the NFP that took the low and the high. Now, which one it does take first, to me, does matter. And the price came for the high first before the lows, which means that to me, the market was more interested on the buy side, well, taking out buy stops in the market. But the opportunity to take out sell stops came along. Now, there was two old swing lows over here that the price came for. With this spike, this was a little bit more wicked here, but it didn't actually fill out the full liquidity void. Now, we know that the dollar does have room to go for a long, but there's also great opportunity for a short. When this price did what it did break structure over here. Let me just try and get this trend line. You know what? Let me, put this here. So the price broke structure over here and then returned back into the same area twice. And we've had a long, but if you see that the price where I've got this area here, this is our supply order block. The price has come in here twice. And as a result, is giving us some shorting. Now with the dollar index right now, we go down to the 15-minute and drag this out a little bit so we can get the candles. As the price has dragged into here or gone into this area, we've had an initial short, right? And then we've come back again into the same supply zone and it's pushing short. Now, here. Now, the low of the previous day is right over here. And the way the price closed beneath now from the, excuse me, let me just go on the H1 to do this. From the H1, the low of the previous days, no, over here. Excuse me, I'll drink some water. Sorry about that. All right, so the low of the previous day is down here. All right. One sec. All right, so sorry, I just had to clear my throat. All right, so the last day, the previous day's low is down here. Let me go for it. And then the previous day's high, let's get that right. Now, I don't know what just happened over there. So this is the previous day's low over here, as we've got going on. And the previous daily high is right here. So there's a few things. Now, because of this movement here, the price took the high before the low and broke market structure down here. Okay, so this market structure break and then the price using this order block to go for a long. This can equal to very much so a short. We have this first swing high, price pushed down in the Asian session and then reversed in the US and took the first high and is kind of stuck around here. Now, I am hoping that the price does go short because then the dollar goes short, it would break past this order block here. Now, for me, because of these equal lows, I get the sense that the price would want to come here somehow. Now, the way that the price could do this may be tomorrow. If the price doesn't take the high of today, tomorrow the CPI news might give us a spike a little bit higher into this area and then push down the other way. The price may just decide to go down straight because again, this movement here, the price returned to the order block and has even got back to fill this fair value gap that was created over here and even pushed a bit further to make sure that is done. And then we've had a body close inside of this area too, and then the reaction short. So I am hoping that the market can give us some sort of a solution here. If it doesn't, and it ends up being a situation where the price goes for a long, that's not a problem at all. But I know that the price will come back to down short at pretty soon. So for now, I'm just watching the highs and the lows. It's just that to me, the daily high here and the daily high here would be good points that the price would want to come to, I think. But then these equal lows down here is just that in terms of cost of movement, I always try to consider this as well. That on average is about each pip that's in the market on average, it costs about $50 million to make the price move about one pip. So in my mind, it makes sense that to take these highs, if the market makers want to drive the price up there, it'll cost them less money to push the price here before going down than to just go straight down without really taking anything on the way down. So this is kind of like my suspicion here. Now, the other side of the story is that if I take the low of today, for example, right here, if let's say the price wanted to if the price basically pushed down to take the low tomorrow, we might get a situation where that old low can be the trigger for the price to go long one more time and then for a short. Now, CPI news to me is probably one of the most cheeky pieces of news pieces that we get. It can be very I want to find the right word. It can be very sneaky and very full of spikes. And this is why I'm coming through with all of these different scenarios over here. Okay. Um, the reason for the long side, by the way, if we go up to the weekly here, we take a look at what's going on. On the weekly time frame, I believe you guys can see this already. We have this supply order block here. Now, to be specific, let me just take this order block here. The only problem that I have so with the dollar index right now going short, if I was to go for the other side, now there's two sides. We have a fair value gap between the low of this week and the high of 2 weeks ago here at 101. So that couldn't leave room for the price to definitely want to pull back down here. The other side of the story, though, is that if you see here, we have close to equal highs. Now, the first high right here of this candle, let me move this thing out of the way, says that this candle is 104.263 for the high. And this is 104.262. So we have one pip apart. So I consider these still to be equal highs, but you can technically they're relative equal highs because they're not the exact same price for the high. But because there's these equal highs here, then we have a fair value gap, aka liquidity void left behind, and then some supply zones that haven't had a return here or efficient price action completely. There is room in my mind to believe that there's also a long. Secondly, let's just zoom in a bit here. Another issue that is that this weekly high that we had this spike from on the weekly time frame here, in order for there to be a strong short that we're expecting to get back down to 99, we do need a weekly kind of move. Now, if the price chooses not to take the equal highs, but just get to this supply zone, if you take a look at what I'm seeing here, when the price spiked here, it just missed this weekly supply zone, but it did fill the fair value gap here. So there's two sides to this coin. One side is that the price may take the high and get into the supply zone, or the price may just go short from here. These are the kind of these are the situations that we've got going on. So for right now, this is kind of where my mind is at, why I'm doing these breakdowns again. Okay, and equally, I'm just going to take this zone here and use it quickly. Try and see if I can use another color to demonstrate this. Now, if you let me see if I can change the fill to something else. Let's see. Let's go for like a pink or something. Okay. So over here, I try to increase the opacity a little bit, and let me just go for the line here. So with this area right here, this supply zone, there's a liquidity gap here that the price has left. But one of the things that I'm kind of suspicious of is that this main supply zone over here, that's in essence capping the price from moving any further above this price point, which is why when the what price wicked out here, the body still closed within here. I'm still kind of suspicious as to what the price wants to do. Inside of this activity here, at first, the open of the or the close of this bullish candle and the open stayed the same. But then the next day, we've had the close of this candle above, not above the highs, but just above these, well, above the previous closes over here. And now we have another close over here. So the price is like is edging further to the edge of this supply zone. So in my mind, the price may just simply break out of this supply zone and continue going long, which is why that there's this other situation here. Now, for that to happen, the only conceivable way that can happen is that either today the body of the candle, the daily candle, needs to close outside of this zone, which is why today is the most important day, because if the body of the candle closes outside of this area, we can get a return and a continuation long. So price can spike back down and push it on. If the body of the candle is not going to close here and it's going to stay as it is, even through the news tomorrow, that presents a situation where we're going to have to really be on our guard and look at the highs and lows, you know, maybe even from the London session going on to see what we've got going on. Because right now, the price is in that kind of limbo where it could either go either way, and there's plausible reasons for both. Okay. So I'm not going to bother to try and look at the news figures and if it's going to be better than expected or less, because at the end of the day, all of that is manipulation. Technical analysis is going to always tell you what's going on before fundamental analysis. Whilst they're moving the money right now into the positions they want it to be, you know, they've already done their CPI preparations today and yesterday. Orders are being set in the right places, and it's just about using the timing of the news as an excuse to do all the crazy moves they were always going to do. So I'm not going to bother to look at the news, but just looking at from this perspective, you know, there's reason to believe the price is going to go long and also to go short. And so, you know, doing this analysis and looking at this order block here, I'm just suspicious about how in essence, the bullish candles, the closes of the candle have become higher. Now, in this case, with this candle right here, because it's closed this gap, even though there are 2 wicks here, and it looks as though it's closed, let me just show you what I mean. Right here. Right over here, even though I know the body of the candle, there's 2 wicks here, which means we have a liquidity gap, a lesser one. The body of the candle here has closed this gap here, which is okay in terms of filling out the gap. But then because it's closed the gap and it stayed over here, I can give it a pinch of salt that this supply zone can still be used to push the price short. Okay, and this is why I'm not discarding this supply zone, because if it wasn't a gap here, I'd be suspicious that the price is going to break out of here and push up further along. So that's my situation. This is basically it. So I'm gonna check and see what we get on the H4. You know, but again, the way the structure of the price is, I'm interested to know what the price is gonna do. But again, these are just the two sides of the story. And of course, looking at the dollar index is one thing, but it's also always good to look at other pairs as well. So I'm going to show you the pairs that I'm in and what I'm looking at. We'll take a look at the pairs and I'll show you my analysis for them. Okay, so that we can take a look at what we got going on. So, all right. So right now, looking at USD CAD, I decided to take a short. I'll explain to you why I'm in the short, even though it's been moving ridiculously slowly. Now, initially, when I was telling you guys about the short that I was looking at, the price took the high here. We had a reaction. The mistake I made to try and take this trade from it in as the price returned is that if you look at this price yourself, you'll see that there's a swing low at the new market day open that if the body of the candle had closed beneath here, we would have had a much stronger market structure break. Okay. Then what we did have instead is that the price decided to come for the last high that exists over here. All right. Here's the high. And so my second point of call is that even though the price is taking a high, on my other account, I have an entry somewhere here. Because if I zoom out just a little bit on the H4, USD CAD, if the body of the candle was to have closed here, we know that the price is going to fill out this liquidity void. We have these two daily highs here. So, no, two weekly highs, excuse me, on the H4. So, two weekly highs. Let me just take this here. Yeah, so we have these two weekly highs right here that the price has left behind. That would be a great target because there'll definitely be buy stop liquidity even over this swing high here. Because of the way the price pushed short, I'm sure that there'll be liquidity above these highs. So if the market is going to go for a long, then USD CAD will be a great buy because that will give us like 250 pips. Okay. Now, my thing is that what I figured is that looking at the price action, we have this low right here, which came from the news, this spike here, which took these equal lows, all right, and returned to fill out and react to this section here that we have. Okay, this last swing point, this is a reference point that the price was using for the previous spike that it did here. Okay, so my thing was that, okay, if I'm going to take this for a short, I'm going to take the attempt. Now, when I took this trade, the body of the H4 candle, as you can imagine, was way outside of this supply zone. Because again, the price is still taking a weekly high and the bodies of the candles are still underneath this area. What I was thinking is that, okay, I'm going to take this short. If the body of the candles don't close above this body here, then I'm going to continue going short. And if anything, I can use this supply zone to the left here. And when you consider this whole supply range, we have a strong area of supply that is a very easy telltale thing to do as to whether we're going to take a long or a short. Now, the reaction has been slow. It was good in the morning, okay, but because the USD CAD is a US pair, the US session will be the best time to capture the liquidity. Now, for now, the price hasn't done that much. If I go to the H1 range, I'll show you what I'm talking about. Okay. Price hasn't done really that much. Okay. And then we have this low over here. So my thing is that I'm holding on to this trade that even though it's moving weekly now, things can change pretty quickly. And if it does go for a short, my full target for USD CAD would be, so you may want to decide to go lower, but for me, as the market open situation happened here, I think this needs to be corrected. We've had the price come to this market open. This is the demand order block on the H1, but none of the candles actually returned into this area before going short. And there's between here and here, we've left a fair value gap. So my thing is that if this is going for a short, I'm expecting to hit straight down here, which will be great. On top of that, those lows there, because it's the beginning of a new market week, it is also a weekly low, which is great. Now, first, looking at the trend itself, the price we had all blue candles. So what we call in the Wealth Group Academy institutional sponsorship, the price gave us strong candles. But as it got towards this supply zone, the bearish candles or bearish pressure started to come in. And the price, the directionality of the trend is starting to tend towards almost like it's accumulating. Now, don't get this wrong. This can be a deceptive move because the price could really shoot up here and break past. But we need some sort of sign for the price to let us know that we want to do this. Now, this is where I'm going to hold into the trade for one more day. But if the CPI news, for me, the smartest thing to do would to be at break even if I'm just going to hold through the news, depending on what account I'm on. But my thing is that I'm looking at this low. So right now there's a low here that was created, a H4 low. It didn't actually enter into any demand order block. Well, specifically it did, but not this one here. This order block here that produced this movement, it needs a return. And so my eye is on this. I explain what I mean. So we have a few H4 candles left until the CPI news at 1:30. To be specific, because it's 3:36 right now, the next H4 candle's at 6, so that's one. We have one at 10, then two in the morning, another 6 o'clock one, then we have a 10 o'clock one. So we have four H4 candles left, really, because the one at 10 o'clock is going to carry through until the news, because here in the UK, the CPI news will come out at 1:30. But I guess for all of us around the world, it will be the same. We have 16 hours left until this news is going to come out, because right now it's 3:60. There's 16 hours left. In terms of yes, well, around about 16 or 20 hours left, something like that. Okay. So if there is a break beneath this H4 candle before 1:30, then I'm definitely going to stay in this trade and go for the short, because this H4 candle here, this break beneath here, will let me know that we have this supply pressure and we've got that going on for us to give us a short. On a H1, the reason why I'm also saying that as well is that additionally, what would help to kind of have a quicker confluence is if we have a strong H1 body close beneath the previous low, because that would give us a sign of continuation, and even though this is one of those cases where the price hasn't really done much, I am still giving it a chance in terms of reaction, because things can change pretty quickly. Okay. If you look at this, I mean, I know this was news, but this is a great example of what we had. The price did take the low, so it ran the sell stops. We have this gentle movement here, and then bam, all of a sudden the price just pushes down really drastically. Okay. We had the same situation, slow, fast push up, and then we were pushing down pretty slowly, but things could really pick up even today. Now, today, because there isn't any high impact news whatsoever, it doesn't really help the circumstances of the price action. But nonetheless, I'm still giving the market a chance to show its hands to us to show us exactly what it's trying to achieve here. So with that being said, I'm going to give USD CAD a chance. Now, if the wick of the candle, the price struggles to break beneath this low, and all we get is a sell stop run, then I'm actually going to close this trade. Because right now, at that point, we're in danger of the price basically going long tomorrow, possibly. Okay. But this is kind of like my view, especially because I know that it would have been a good clear, well, I mean, the market is good at trying to hide what's going on and being so obvious. But if there was a H4 close above this body here, no matter what's going on with the wick, I would have been out and probably tried to put a buy stop somewhere and capture a little scalp on the way up. Well, it's not a little scalp because the liquidity void is large. Now, because the liquidity void is large and obvious, I'm sure some of you are saying this and seeing this, that if you look at the USD CAD, and if I was to switch over quickly to the dollar index, they look similar in some senses. The dollar index also has a big liquidity void, just like the US, not the US 30, just as USD CAD has. So really and truly, it'll be an interesting one to see. But I personally think that we're going to get at least some sort of movement back down. Even if it's just to take the previous daily lows down to here, that would be, something that we could get, So this is kind of like my view on things. I'm trying to figure out what we've got going on. And, from there, we can, figure out what we have from that point. So with that being said, let's continue on. So with this USD CAD situation, this is why I'm in the trade right now. I want to hold on to it. I mean, there is a chance that the price may even be cheeky and even spike the high tomorrow. But if I don't see the H4 body close, I'm not going to react. Now, the good thing is that when the news comes out for the CPI, hopefully the price has a progression to it where it doesn't just shoot off 200 pips in one go, because at that point, nobody's going to really be able to tell if the price doesn't take the low. But if it does take the low tomorrow and kind of hangs around here, I'm just going to be patient to see and give it a chance because we may end up getting the short that we're looking for, and then a long. All right. So apart from that, let's see what else we've got going on. Now with NZD/USD, again, I prefer AUD/USD, but NZD/USD is one of those ones that even though I know that the price would be great to give us a short, and there's very good reason to give us a short. My only issue with this pair is that let me go to the H4 and take this over here. This H4 order block is the only thing holding back the price from pushing down to fill the liquidity void and the fair value gap from here to here, because we have three blue candles and we've only had buy prices being offered. So we have a fair value gap, as those of you who study ICT stuff would know. Okay. We had this inductive move here that's taken these lows, and then we've had an accumulation after that, which lets me know that accumulation, in the price delivery structure that we know we have, can give birth to a move in the opposite direction, even as a trend. It can go in the same direction, but possibly even get another direction. Now, NZD/USD was my best trade last week because I took the move from here, and I did come out a bit early because I was managing more than one account, and I was tired as well, so I thought I'll just come out down here. But it did give this last week to where my actual target was. But hey, I missed out on those pips. I missed out on it. But I'm just a little bit suspicious of the price with NZD/USD, that the price does want to go short. When you go to the daily time frame here, we have this demand order block. The price has done a very clean break beneath and return. But because of what we have on top of here, I'm interested to see if the market will be so generous to go all the way down there. Okay. Or not at least try to attempt to take these highs, for example, again. I'm still being a bit suspicious with the market here. But, nonetheless, we'll see anyway what the price is going to do. Now, NZD/USD is not as great as AUD/USD, but my final point I just wanted to add here is that with NZD/USD, I'm waiting for something simple. Because we had such a strong wick induction that took the price along and broke structure, and it's come back here once, and now what the price has done is come back to the next order block that's fed price from here. So if you follow with me, we have this demand order block here, which you can even use this candle itself, just the body part, to explain this. This body part has taken off for a long, given us liquidity. Then prices return back to the same area and push along, taken this swing high and made us a higher high. And then the prices feeding into the next demand order block, even if we use this small area here. I use a different color so that it can be a bit more visible. See if I can do this. Yeah. So in this area here, you can see the prices just drop down into this area and it's having a reaction, which means the price may even be cheeky and come back up a little bit higher before going short and just rub out all of these highs, because at the moment, the price is forming a trend line, which is a common retail trading pattern. And I call this a sell order aggregate. So an aggregation of sell orders with stop losses above here. With CPI news tomorrow, it could be an easy chance to spike the price and then push short afterwards. Okay. And maybe for me, if you're wondering where I'm thinking the price may go, if you look over here, and we look at a reference point for the low. Now the price used this same area for a reference point. It may not come to this high. It may just take this high of the previous day and then go short. But if you want to really be cheeky, they might actually push back up to around about here and then push short. So I am watching to see what's going to happen here. Now, if the price does break beneath, which is what I'm hoping for, so that we can ride the wave down, if the dollar index does well, if the news gives us what we want, then I'm just waiting for the price to break this last zone here. If it does, I'll take a sell. I wouldn't even set my targets here because I'm sure the price will go further. I'll be looking for some lower down targets to around about here, from here, which is about 90 pips on the downside. Okay. Now, I am hoping for the signs first, because the thing is, because this H4 candle or this H4 demand order block is holding the price up so well, I'm just a bit suspicious that the price is going to have the strength to just break past and keep on going. I just don't really see how. If it was going to make any move, the greatest thing to have happened right now was at least for the price to be breaking past the midway point on the H4 of this candle and then pushing, but it's not doing that. So it's making me suspicious that with this accumulation that's happening and this beautiful inductive move that actually did take a previous weekly low, it's just not the exact previous weekly low. Is I call this a type 2 induction because it's taken a low a few weeks back, still a significant low, and the low, excuse me, is down here. Well, this low right here, these equal lows, but it didn't take the actual weekly low. Let me correct myself. Sorry about that. It took this significant low, but not the weekly low. So, of course, this is where I'm getting my short proposition from that this low. And if I take off the period separators and show you what I'm talking about, we have this other low here. Now, when the news came out, my target was to take this weekly low. Now, okay, it did take the low. This is 808 and this is 807. So by the price came here by 1 pip. That's not really a strong take of the low. I don't see what buy stop or in this case, excuse me, sell stops would have been taken what or sitting 1 pip beneath. So this low hasn't been done justice just yet, if you want to put it that way. Okay. So because of that, that's the way I'm getting the hypothesis that also the price may decide to descend short and really give us a big, big short. Okay. But I just need the telltale signs to come through to be able to really, trade with this. And of course, my final rule kind of move I'm looking at now. Let's go here. If I look at AUD/USD, we can also look at gold because Australia's common economy and price and value of their currency is heavily, not completely weighted on gold, but there's a lot because gold is one of its main exports. The structure of gold and AUD/USD, not even just based on it being the US dollar being the core currency in both of those, but because of the underlying resource there, we can analyze one and the other together. Now, AUD/USD is in the same kind of situation. Now, with AUD/USD, I think I have more suspicion with this why I think the price is going to be a long first before there's a short. And I explain to you why. Now, I know that there are equal lows here, don't get me wrong. The price still managed to take the low. And if you notice here that the bodies of the candles haven't been violated either. Even if you were to use this tiny little order block here, for example, I'm using the H1, but we could equally use a 30-minute. The price is respecting this area. But my thing is where I'm suspicious of AUD/USD is that the high of this day, which is the 8th, is at 0.67346. And this high is at 0.67344. Now, using my IC markets broker to analyze this, both highs are actually read at this value here, the first one, at 0.67346. So either they're equal highs or they're relative equal highs. And so to have two daily highs here just sitting there, not being touched at all, and with the CPI news coming out tomorrow, I've actually decided to take a long. Not a big long, but just a long until the price takes these highs. And whatever happens after happens. But I'm just a little bit suspicious that AUD/USD, we may get a spike the other way first before the price goes long. And again, when you look at the price action from here, this H4 candle or this H4 order block has held on pretty well. Now, if things change in the next, the last 4 or 5 H4 candles we have left, and there's even if the H4 candle closes at the edge of this area, I'll be suspicious that the price may want to break beneath because again, if I ignore from this low, but I use this as the new low because the price did get into a little bit of this fair value gap. But if the price goes from here down to here, from where we are, we could have a really nice move down to fill this fair value gap. But the H4 candle order block seems to be hanging out well. And if you look at the H4, you can see patches of equal highs here and then liquidity voids where we also have fair value gaps on the upside, another set of equal highs here. And not only just that, but going to the daily and we're looking at monthly highs. I've always looked at this monthly high setup where we have like a double top formation with a neckline, and the price has come close to the same high but not taking them, I'm just suspicious that even though I know what the price has done here, if I drag this supply order block to the left and we take it from here, you'll see that what the price is actually doing is holding onto a very important flip zone. So the price has gone short. We had the touch back in here and push short, but you notice that the second leg going back into the same supply zone, we don't get a very strong push back down because price is on the bullish side, shoots past, returns to the other side. We have this little bit of accumulation, long wick over here. Price hasn't violated the low, and even though it's flipped this area, which is making me suspicious that the price may actually go over here. Now, initially with AUD/USD, when the price did this move last year, when we had the important interest rate decision, I was waiting for this price to come back here or the price to get back into this supply zone. And from the grand scheme of things, I still think that the price may end up doing something like this, which will go very nicely in line with the fact that I do expect the dollar index to get a bit weaker, because this will provide a return back to this order block. And then from here, we should be expecting a very strong short that should last for quite a few months. So this is where my suspicion is, with the price. I'm not 100% says, well, now, even if the price doesn't get here, but these two daily high or monthly highs have been here for quite a while. So I wouldn't be surprised if the price came here, which will be about 210 pips long. So this is where my mind is at, which is why I'm taking the pun on AUD/USD. And I don't mind just taking profit until here. If it continues going, I'll find a way to just get back in and take the rest as it goes long. But this is kind of like my view, guys, anyway. Okay. So I hope that helps you to understand where my mind is at when it comes to looking at these pairs. I'm trying to figure out, where my mind is, where I'm at with it. But that's kind of like what my idea is. Okay. So with that being said, if I look at gold, it's just, again, I said, because the liquidity is thin, it's not really doing the most work, the most here. But if I go over here and look at gold, now gold, similar. Now, the thing is that I do know that gold is going to go short. I hope we can all agree on that. There is going to be a major short on gold. If I go to the daily, you all know why. We have such a huge liquidity gap that's been left behind here, right? So there's going to come a time where the dollar is going to gain its strength back, because before gold to do a move like this, we're going to need to have a strong dollar. Okay, take this line away, take this away. So in the same manner, I know that there is going to be a time where we're going to have a strong dollar, which is going to push prices short if you have the US dollar as the quote currency. Now, first, we have this reaction here that I'm looking at, right? And we have this also reaction over here. My thing is that right now, similar to all the other pairs, whether daily or H4, there's some sort of demand zone that's keeping the price from going any further lower. And at the moment, there isn't any signs yet as to whether the price would want to continue going lower or go long completely. There's about 70% or 80%. The final straw would be some sort of body close. Like, for example, if gold today, the body of the candle closed beneath this previous low and it closed beneath this order block, then I'm going to be looking for some way to enter to continue this ride down, because we know it's going to go short. Okay. But sometimes what's obvious is not what you should trade, because the obvious thing is probably the worst thing to do. Now, over here, if we look at what's happened in this week, the price came out at the beginning of the week with a very strong short. The price purposely took this low, and it took this low. It just missed this low by a few pips, but it still did take a few lows on the way down. These swing lows, because they are swing points, they would have some sort of orders, either stop losses around them. Now, the price has been hanging around this area, and even though the body of the candle may have closed a little bit lower than this wick, the wicks of these candles have still respected the bottom line here. We don't have a violation of the low. The body is still in shape. And if I go to the weekly here, you see that this is still a weekly move. And we are inside of, now, if you look at this and we follow the price as it is, This is an order block here, demand order block. Price gave us an induction here, pushed off for a long. And then it's formed a new order block, which is this whole area over here. And then the next stop on that we have here that the price has done is inside of the flow of this order flow. So that means that there is a potential the price may just come back out one more time. It doesn't mean it will have to take the high of the previous week. I don't know if it will do something like that, but I do think that it's setting up a structure where the price could potentially move for a long. Now, currently, when I go to the M30 here and we look at what we've got, these two candles represent demand. Okay, the price has taken the low of the previous day here. And then what we have on top of that is that we have an order block here. I want to show you what's happened today. This might actually be a good long trade as an attempt. Price has left us a order block here. All right, this is the last swing high before the price took the low. You have a break of market structure. We have the distribution, which means we have new buyers who stepped into the market in this case because of a long. Prices come back to that order block right now. So, I mean, to be honest, this is a no-brainer to at least take a long back up here. In fact, I like this trade so much that I think I'm going to get in right now. So let's give me one moment. I want to put something on there and give this an attempt and see what happens with it. All right. So yeah, I put something on there. Let's see what happens with it. Now I'm trading with very, very low risk because this is an account I'm trying to recover. So I'll go for a 0.02 even, see what happens with it and see if the price will respond. If it doesn't work out again, not a problem to me at all. It's worth the attempt. It's better to try and fail than you never try at all. Put this beneath the order block. Okay. This kind of trade, if it happens, it's a defining factor trade because either it's going to do the long or it's not. I mean, the best targets for it for now, I will just set them above this high. Okay. And the reason why I would leave it there is because I see a supply order block not too far to the left, either this one or this one. So if the price was to break past here, then I could re-enter. I will have some profit. I can use my profit to get in a bit, more deeply. But nonetheless, this is kind of like what my mind is on when it comes to looking at trades. So with gold, I'm actually seeing a long, same as Australian dollar, without being biased. Okay. Now, if the price does, here we go. My final kind of comment here. If the price does, the body of the candle does close very near to the low here, then I'm going to be suspecting that we are really just going to get a short out of this because there's a very obvious liquidity void here that needs to be filled. And I don't know if the news is going to be the run to fill it, but it's just I'm kind of suspicious still because even if you look over here at this week, which is the last, this is the kind of last price action of 2023, we have a high here, which is 2088.43. We have another high here on my charts that's also 2088.43. So these highs right here are exactly equal highs on this chart. So that makes me suspicious that, in fact, you know what? We might even get back up to this 2088. So I might just leave this here, because if the news does help to carry this movement forward, then this will be a great move. Okay, so that's the kind of trades I'm going for. If you want to take that same trade with me, tell me how it goes. You stick in there, tell me if you profits you, but we'll know very well. I'll cover the news live so that we can have a look together what happens, and let's see what we get out of the charts here. Okay, so I hope you guys enjoyed that, and I'll catch you on the next one, guys. Everybody take care and have a